All right. So we can officially kick the session off. I'll let Andre pop in here. I'm waiting for an email to see, if he's giving me an ETA. But I've got the hour, and then I myself have to head out. So if he needs to reschedule, that's on him. But anyway, we'll go. So I've been looking forward to this. We did this not too long ago. It may have been 3, 4 weeks ago. Andre and I jumped onto a little walkthrough tutorial session with just him and I. But I thought, hey, let's bring some people in. So we had, 15, 20 people live, and I posted it. Have had a lot of questions. I see that Edgeful is gaining some nice traction on social. They just posted a giveaway with their platform this week. If anybody's interested, give me one second here. If anybody's interested in getting the access to the dashboard for free, they are picking I think five followers this week that join their Discord channel. So if anybody is interested in that, let me get rid of this. I did post it in my Discord earlier. Let's see here. That's tasty. Oh yeah, right here. So here is the link. So copy text. If we go to, I'll click on this Google Meet chat right here. If anybody wants to click on that and join their Discord channel, you're more than welcome to. It has to be a new follower, so if you're not in their Discord, you join it this week. They're going to pick 5 winners at the end of the week to get the full year, full access dashboard for Edgeful, which is around $2,000. Hopefully, one of you gets picked. That'd be great. I also have some really nice referral codes where if you use my code or my affiliate link in Discord, I believe with my my referral link, you can get locked in for like $30 to $35 a month versus they've increased it to almost $100 a month because they've rolled out a futures feed, they've rolled out a forex feed in addition to just these stocks that I trade. That's when I first took a look at Edgeful and started trading it. Is I do a lot in the SPY, the Qs, I do a lot with the VIX, and individual stocks, yes, but I'm really interested in just the day to day. So the SPY, which helps me correlate that with the SPX and some of the indexes. So I trade a lot of index futures. Zero DTE is fine when I think it's appropriate. Every single week, I'm certainly looking at some of the probabilities with the Edgeful, with gap fills and average trading ranges. Those are really important studies that I look at. And then Andre, if he jumps in here, we can go through a lot of cool things with my daily breakout levels. One more thing I'll say about the dashboard as well for Edgeful is I'll see if Andre can do this for you. If you also are interested in signing up through the Edgeful platform and get access to it, it's web-based, it's really user-friendly and intuitive, it's easy to learn, but also they do offer a suite of trading view indicators, which I'm super happy with. So I use these every single day.
Hey Chris,
Yeah,
you're
yeah.
on mute.
Oh, I'm sorry. My fault. I was talking in my broadcast, but I didn't realize I muted myself in the Google Meet. My fault. So the good thing is, as I'm talking, my recording is good for that audio. But you couldn't hear me. My fault. So I guess let me back up here and just summarize the last couple of minutes what I was talking about. I posted in the chat here that they're picking winners if you sign up for their Discord. I also have an affiliate link in my Discord. It's right here with all my other stuff. So affiliate link, and if you go into, I've got the Edge Finder. Here's my Edgeful, my trade station for my options platform. Here's Edgeful right here. I have a promo code and a direct link. You can get a couple things. You save a ton of money. You get grandfathered in for like a $30 to $35 month, or you can do it annually and save a few more as well. I think they give you like for 10 months, they'll give you 12 months of access at a rate that's like 75% cheaper than what you can get now since they rolled out a futures and forex feed. In addition to that, they also provide a trading view indicator suite, which that's what I was talking about. Is if you've joined me in my live sessions, I show this stuff every single day. So I want to walk you through a couple of these really important takeaways from me, which is if I look at this chart, this is a 5-minute chart in the SPX or the SPY, so we can pair this up with some of the Edgeful dashboard studies. But a couple things that you can remember and take away from this session and get access to the Edgeful dashboard for these things. A couple things, anytime you see a gap, okay? So let's talk gaps, let's talk gap fill. That's a really important study. Also, this opening range breakout, that's from 9:30 to 10:30. A lot of times, price will stay inside that range, poke the highs, poke the lows, or break the highs, break the lows. And each one of those studies, each one of those instances has a probability attached to it. So, as an example, just keep this, and we'll go through and we'll verify all the studies here. But basically, if you have price, let's say it opens on the day, okay, price opens right here. So we establish a range from 9:30, let's say, to 10:30. Okay, now obviously this range will, if this is 9:30, then 9:45, then 10 o'clock Eastern time, if price goes down a little bit, that lower range will expand and get a little bit lower. But when you lock this thing in from 9:30 to 10:30, what you're looking at is price. Let's say you go all the way to 10:30 and price is established. This is the low from the open, and then this is your high. Well, for the remainder of the day, there is a probability that's around 60+% we will break a high of the day or a low of the day. And also, when we break the high of the day or the low of the day, we tend to stay that way. So when we break high, we tend to stay green. When we break low, we tend to stay red. Okay, so that's a really important thing that directionally, I know sometimes we think like, oh, it's going to be a really noisy day. Probability wise, it still stays in that direction. So if we, push higher, we tend to stay higher for the day. We push lower, we tend to stay lower for the day. There are exceptions. Nothing is 100%. I'll show you that in the studies. But when we have a probability, that matters, right? And then if you take that and expand that further, not just a daily range, but also with a weekly range. And that's what this study also shows here. If you look at the shaded zones in the background, the shaded area is green because that was a bullish weekly move. So as the week is green, this shaded zone is staying green. This week so far, we're down with a red day, and you can see that on the SPY, on the weekly time frame, you're going to see it's a red candle so far. So if I zoom in on my SPY right here, oops. So we have a red week that has just started with today's trading. So we're red on the day, we're red on the week thus far, and you can see that my shaded zone is red for right now. Okay, so Andre's coming in the call right here. Andre, what's up, dude?
Hey, how are you?
Good, man. How are you?
Great.
Good, good. So we just got kicked off here. Couple things I wanted to run through with you. So I wanted to make sure that everyone understands, what type of offerings you guys have right now. I know that I have affiliate links with you guys. I know that I've been told for a limited time that there's some prices you guys can honor to kind of like grandfather some people in. If you can honor that for this group or anybody else, that'd be awesome. Anything with the trading view indicators that can be included with a suite for them, that'd be awesome. But I just want to see, I know you guys are rolling out a lot of information and packages really quickly, so I just want to make sure I'm not saying the wrong thing.
Yeah. So the grandfathering was a few weeks ago, so
Okay.
that time passed,
Okay.
unfortunately. The trading view indicators are still available, and they're available in the middle plan, so in the essential plan.
Okay.
If you were to sign up, if anyone watching this were to sign up, you still have access to them,
Yep.
and they're just in that middle plan. So, I mean, I highly recommend them. I know I see you're using them right now, and,
Yep.
and I
Yep.
see a lot of people love them. The other thing is, we also created the ability to request indicators too.
Yep.
So that's just one thing that we added recently out of a bunch of other things that we added.
Okay. And then you can request. Yeah. And when you say request, you can request indicators and reports, correct?
So what I mean is we will literally build the custom, like, new indicators for you. So like
Oh,
hypothetically.
right. Okay.
So yeah. So an example would be if you want to see like the opening range, I want to see like show me what's 1R, 2R, 3R of the opening range.
Right. Okay.
We
Very
can build
nice.
that out for you. So like one thing that we don't do, just so I can say it here and so everyone knows, is we're not going to be building anything that has a buy or sell signal on it.
Right.
So just FYI on that.
Right.
Yeah. So any indicator, if you want to see something in terms of like any levels, any pivot points combined with something else, we can do that. So that's something there.
Sure. Fantastic. Okay, so Andre, I was just walking in or walking everybody through a couple of things. Some of my favorite studies with Edgeful, the gap fill, the daily trading range, the ATR, the probabilities when we break the opening bell ranges, the probabilities when we break the highs or the lows of the week, break the highs and lows of the day, the previous day's low, the previous day's high. All that stuff is, I mean, I've rattled all those off, but those are all my favorites that I know that I use every single day with Edgeful. And so what I wanted to do and with the time that I get to spend with you and for this recording, everyone watching live, I know that you have, so have you put together some kind of best practices in futures best
Yeah.
practices like that you're using personally. Like here's an example, and we can talk about this more offline, but I am getting some interesting symbol feeds with Tasty Trade where I just sent their support team a message today. So basically, my portfolio right now, I'm trying to look at getting some dabbles and positions established in some of the value plays. So like the S&P Value ETF,
Yeah.
which so you've got S&P Value, S&P Growth. You also have Vanguard Growth, Vanguard Value, which are very
Yeah.
correlated, but there's options around all those instruments. And so knowing that tech is essentially leading everything we've been seeing this year. Nvidia, Microsoft, Apple, top three stocks. Nvidia's been selling off, as of last week a little bit, and that's fine. I think that's certainly welcome, but it's a very narrow bull market rally, and it's heavily tech led.
Yeah.
AI is a great thing, and it's the buzzword, but it's also leading to some deflationary pressures, which is totally fine to keep the markets excited. But if we don't have broad market, broad company participation with better earnings, better optimism, better forward guidance, you can't have three stocks continue to push the market the way that it's been pushing. We're up 15,
Yeah.
16%. And so a narrow market rally is going to fade at some point. So my point is, um, I am looking at trading some options around some of these value ETFs, but I want to do like a ratio spread. I want to do some, synthetic trades so I can reduce my buying power reduction or the buying power requirement. But Tasty platform, they have a closing only status on some of these instruments. So I can't do anything outside of buy the actual stock or ETF and buy whole shares. If I want to control an option contract, then I buy 100 shares. But
Wow,
if
really?
yeah, so I'll show you. So I sent a screenshot. Let me get out here. So if I go VOOV, that should be value. And if I try to build an option out here, I'll go out to, this is roughly 90 days out in September, but I
Yeah.
was looking at doing like a 20 delta, and I would do a ratio spread. So if I sold the 20 delta put, I mean, the credits are way off because the spread is high, but if I bought this with I'm going to make this a ratio spread. So I'll turn the 170. So I buy the 170 put and I sell two contracts of the 169. So it works the same as a naked put. But
Yeah.
what I can also pair this with is essentially this acts as a $100 debit spread. So if I make profit on the 170 by 169, I actually would take ownership of the trade. There's two numbers you have to know. So if I get assigned the stock, it's at 169. Okay,
Okay.
and then I would get 87 cents on the credit. So I subtract, oops, so 169 minus the 87 cents credit, which puts me at a break even of 168.13 plus another dollar credit. So it'd be, oops, fudge, 168.13 and then minus a dollar credit on the bear put spread. So I would own the VOOV, which is a Vanguard value ETF. My break even would be 167.13. Now, if I take a look at a chart here and I go to 167.13, that is below this dip we had back in that would have been right around this low in April.
Yeah.
So if we get below April's low, we might have a deeper correction at hand. But if I'm going to say, you know what, for the context and possibly the rally for the rest of the year, if April's low is now like the low of the year and we test it and it's not going to look back, I'm interested in owning at 168.
Yeah.
That should be safe. And if price goes up, I get paid. The problem is if I put this trade on, I don't know if it'll say it now because we're after hours here, but if I review and send this, right here's what I keep seeing in Tasty. Currently set to closing only. Only
Mm.
closing trades may be submitted. So I did get a message from support, and I know this is off topic, but
Yeah.
support is saying that if you still want to place trades like this, you can call the trading desk. So the
Wow.
reason I think this is interesting is I have like 10 accounts that I have to trade, and if I call the desk, I need to make sure, can I place trades for everyone's account with this type of order? Yes, no, maybe
Yeah.
so. So I'll find that out tomorrow. They got the message to me at like 3:45 Eastern time today, so I didn't have a chance to call and do this for
Yeah.
everybody. But if that's the case, I will be looking at VOOV and also some of the other. This is the IVE. The IVE is the value S&P, and this one's up about 25% from the October lows versus the growth, which is up around 40%. So it's that whole notion of value versus growth, possibly some rotation. I think I'm way early in this, by the way. I think if I get into it now, we might stabilize in value, which I'll trade options, but I'll probably,
Yeah,
sacrifice some upside if growth continues to happen. But
yeah,
growth is hopefully more volatile. But
yeah.
that's not why we're here to talk. We're here to talk about Edgeful. So let's
One
dive
thing
in.
that
Go ahead.
when I was at Goldman, I did an analysis on growth versus value, and since the '80s, it would switch.
Yep.
Growth would outperform, value would outperform. Growth would outperform, and it would swap back and forth. Then 2008 came, and now we're on the longest growth outperform streak
Yep.
in the hits like in the last 60 years.
I know. I know.
Uh, it doesn't mean that it has to end just because technology is exponential. It doesn't mean that it will switch. Obviously, we
Yep.
don't know,
Yep.
but it's just a crazy streak that since 2008 we've had this growth has been outperforming by like a significant margin. So it's
Absolutely, and it's not even close. The only thing that I thought was interesting, I've got some data here as well. So if you go growth versus value, the last time, so this is the highest level from growth outperforming value on the S&P and the Russell since like 1999. And the one correlation that I drew from this is from 2000 to 2006, value outperformed like 89% to 11%. Value outperformed over that
yeah,
6 year stretch, but that was because there was a tech bubble and a tech burst.
yeah,
So if we have a bubble and burst and we all of a sudden face a deep recession, sure, tech is going to get smoked and there's going to be deleveraging, and value and defensive will probably be the best way to go. It can say outperform, but remember, you can still be down in value and just be down way more in growth. And technically, value's outperforming. So
yeah,
it doesn't mean it's safe. It doesn't mean it yields. It doesn't mean that it yields profits. It just means that value can be the lesser of the crappy performances, because it's
yeah,
like, well, this is more defensive and this is small cap and they don't need as much money to borrow. And a lot of this hinges on the Fed and hinges on maybe the next 12 to 24 months with a rate cut cycle. So all this stuff is top down macro, but I think it's going to be interesting how you don't see a lot of correlations where really smart macro investors or value funds are probably salivating by the potential of what their value funds can do in the next maybe 1 to 3 years. The
yeah,
problem with that is if we have a full-on deleveraging event or a credit event, it doesn't matter what you're in, because just look at 2022 to feel what the burn is like, because everything was down. Bonds are down, equities down, doesn't matter what sector you're in, everything sucks.
yeah.
So that's when you want to be a currency trader.
Yeah, that's
Really.
the interesting thing is the question I always ask myself is how correlated are the returns of the markets to the Fed stimulating the economy? How correlated are returns to printing money?
100%.
Yeah, right. Almost. I mean,
Pretty much.
at
Yeah.
this point, almost
Yeah,
right.
I
So,
know.
like, how does that? Anyone that's. I mean, at this point in the last 4 years, you could have covered your eyes, thrown a dart at the board, and made money.
I know. Yep.
And what's the reason for that? I mean, in my opinion, I mean, not in my opinion. I mean, there's a bunch of different reasons. There's obviously like growth factors and all these things that have happened, but you cannot discount the effect of printing money.
Of
It's
course.
just it forces prices to go up. It happens to real estate. It happens to assets. It happens to equities because people don't want to own the currency
Right.
anymore. You
Yep.
want to go to an asset. And yes, obviously prices going up is great, but that doesn't necessarily mean it's going up for the right reasons, which is not good.
Agree. And so here, and so to that point, this is probably my biggest red flag and concern moving forward would be, let's say that we start the cut cycle and the market has a bad reaction to that, to the point that the Fed starts to cut more aggressively than just 25 basis points, and the Fed all of a sudden is now doing few on QE, and the market doesn't respond to it. That is when I believe we're in a deep, deep problem. When the Fed's put and the Fed backstop is no longer helping aid the market's recovery or stabilizing prices, it just gets worse. It'd take a lot for that to happen, but if that is finally like, the straw that breaks the camel's back of we have been don't fighting the Fed, don't fight the Fed for so many years that now the market's conditioned for the market's down 1%. Where's the Fed? Right? The market's down 3%. Where's the Fed? I mean, the Fed didn't do anything in 2022 and the market was up, down, up, down, up, down for, a solid 5 wave correction. It was down 25 to 35%. And the Fed kind of pivoted, but it was just like the glimmer of hope that look, we're at a pause cycle. We know that we want to be restrictive, and so the market, man, it's like the market took a lot of liberties in kind of dissecting the language from the Fed, and they're still doing that, man. It's crazy how the market is like the Fed might not cut at all this year, but the market is like you said maybe once, you said maybe twice. And the market's like, and again, it's so rare to have this narrow market rally that's continuing. But to that point, the SPY and the Qs are going higher, right? That's led by three
Yeah.
big companies. My Again, like I go back to this is an odd time where it's like the DIA or the Dow Jones and the Russell are not
Yeah.
performing as well, and there's a divergence at these indexes. There's a divergence in these ETFs. There's now a divergence in monetary policy. But the U.S. does have a lot of fiscal policy in the background that's still working, and it will stay very pedal to the metal through this election cycle. Whatever that looks like. I know this week, for example, we got a debate between Trump and Biden, and that'll be probably not a market mover, but it's like it's the time is starting where it's like all the election drama, for better for worse, is starting now. It's gonna
Yeah.
it's gonna be headlines and noise through the summer, but once we get into October, November, election's gonna matter. So
Yeah.
that incumbent
Yeah.
or that new administration, it's a power game, and whoever gets it is going to run with it, and the market's
Yeah.
going to react favorably or unfavorably. And of course, we don't know, but I think we're going to expect some volatility ahead. So all these things are good
That's right.
things for trading, but man, it can be a wild ride over the next. I would say the next 6 months. Either the market has complete blinders on and it just keeps going like it's trying to go higher, right? The market wants to go higher,
Yeah.
and blinders would be fine. And so, we also have a couple of interesting scenarios where let's go SPY for a second here. So if the SPY through this, and sorry, my charts have gotten a little messy here. These are just trade tracking and stuff like that. But we could also enter into a not a downward, but I would say just a sideways. I mean, we haven't seen a sideways move, Andre, since. I mean, you're going back to like 2018. That was the last real sideways run that we had. But
Yeah.
2019, 2020 was boom bust. 2020, 2021 was all boom.
Yeah.
2021 was correction. 2023, 2022 to 3, Q4 was boom and just another broad market rip. This is our 2023 summer correction. It's like we have not had a sideways phase since 2018. So that's doesn't 2018 seems like a couple years ago. It's 6 years ago that we had a
Man, that's
sideways
hard to
range,
believe.
right?
That's hard to believe. I mean,
Yeah.
crazy take. I mean, based on what you probably hear online, but crazy take.
Uh huh.
Is a rate hike really out of the question right now for what's going on and how the market's responding? Are we in a position at the moment at all-time highs across every single asset practically ever to
Right.
be cutting rates? Is that the purpose of like, you know what I'm saying?
Yeah.
How is even the conversation of a rate cut in the play right? I mean, in my opinion, in
Yeah.
play right now. I
Well,
mean,
I
everything is at all-time highs.
I know. Well,
Everything.
but I think a rate cut is what is underneath the justification for why the market has moved so aggressively forward thinking, right? The market has moved a lot on the idea of the Feds pausing and no longer looking to hike. So a hike is off the table. But the fact that they're talking about cutting, I think that's because the market is priced in so much so quickly that now the market's like, hey, look, we drove prices higher because you said you're going to cut.
Yeah.
And now if they don't cut, the market's like, oh my gosh, here we go. And then, and I'm saying all this, and we're at all-time highs on a lot of things, but it's all-time highs with crazy amounts of concentration, right? Like
Oh, unbelievable.
the only reason the S&P is up is because of three stocks. The only reason the
Yeah.
Nasdaq is up is because of three stocks. If you're long the SPY, long the Qs, you're long three stocks. Now I can mention those because they're not that hard. It's Apple, it's Microsoft, it's Nvidia. That's it. Because before that it was Mag 7 in 2023's recovery. It was broad market in mostly May, June of 2023 and November 2023. That was the first real taste of broad market that we saw since 2022's recovery in Q4.
Yeah.
Everything else has been the highest concentration, the top 10 performers, the top 20 performers, the highest echelon, and that's where you benefit from market cap because the bigger the company gets, the more the more the weightings get. But you're going to have some rebalancing, you're going to have some repricing, and the scary part is Nvidia, for example, being at one point it was 3.4 trillion dollars. Now it's
Yeah.
like 2.9. It shed like $300 billion in market cap over the
Yeah.
last two or three trading days.
Yeah.
So it has a
Then
lot more responsibility to be like the number one company in the world size wise. It has a lot more responsibility to be like, really, really dissected in a, meticulous way to be like, does this deserve to be the number one company? Because if it's number one company that has 20 to 30% swings, that's going to be damaging to the overall market when you just buy and hold and invest in dollar cost
yeah,
average. That's way too much volatility in a broad based index.
for sure.
Yeah.
The one thing that if you want to, so for I mean, I'm not sure how clean your SPX chart is, but if you want to
Yeah.
switch to SPX and then
Cleaner.
go cleaner is a good way to
Yeah.
put it.
Yeah.
And then if you click that little plus to the right of your SPX, like where you typed in the top left where you typed in SPX,
Oh, yeah. Okay.
little plus button right
Okay.
above it to the right.
Oh, this guy. Yeah. 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 Oh,
Yeah, that guy.
comparison. Yeah.
Yep. And then if you type in Fed funds,
Oh, boy.
yeah, the first one right there with the US
Yep. Yep.
flag,
Yep. Okay. I've seen this.
and then new price scale. So if you undo that, just so you get a new price scale, you just do like Command Z or
Command.
Control Z if you're on a, yeah. Do that one more time. So if you go to that plus, the compare,
Okay.
and then go to that Fed funds, and then on the right side, just before you add it, you need to click on the new price chart.
I
Right
see. Yeah.
underneath.
Okay.
Yeah.
All
So
right.
just
So get rid of
before you,
this. Yep.
yeah, get rid of that. Plus, before, right there on the,
New
yep,
price scale.
new price scale. And
Got
then
it.
if you go to the daily or the weekly,
Yep.
either one,
Yep.
you scroll back a little bit,
Let's go
you
to the
can
weekly
see
here. Yeah.
you can see in 2000, market was at all-time highs, rates were at highs.
Yep.
They cut rates, market falls.
Yep.
2008, new all-time highs,
Yep.
rates were at highs,
Cut rates,
cut
market
rates,
falls.
then it falls.
Yep.
2020, different story, obviously, a little bit of a different story.
Sure.
However, right now, all-time highs, rates are at highs,
Yep.
they cut rates. What happens?
Market fall. So that's why, and that's where this is a great point because I've heard a lot of good analysts talk about their their thinking of when the market timing would be a bear market or a turning point would be when the Fed cuts. So if the Fed cuts in September, historically we're seeing evidence that when the Fed starts a cut cycle, the market typically is topped out and ready to start retracing quite a bit.
Yeah.
Yeah,
And
that's a great
I'm,
point.
yeah, I'm not sure if it's going to happen this time. I think there's
Right.
a lot of, I mean, maybe this time is different.
Well, yeah, fiscal policy is the one thing that is different this time, right? Like fiscal policy
Yeah,
is why 2023 was the recovery that it was, in addition to the Fed pausing, right?
yeah,
I mean, the Fed was just like, hey, look, we're going to say the same thing every single FOMC meeting minutes, every single FOMC, press conference. We're going to say the same thing, and the market just did what it wanted. But
yeah,
fiscal policy in the background has been heavily spending, lots of aid packages, lots of other stuff, all lumped together. But for the most part, there's still plenty of liquidity, cash going into the markets
yeah,
and in the economy. So could it
yeah,
be different? Sure, it could be different, but man, this is something that everybody needs to pay attention to because now you have a rational explanation and historical example of if the market has a September effect that's nasty and we can't recover in Q4, look out 2025 because that always is a bad sign. And also, one thing that we just that on this this is a perfect tangent to this, the inverted yield curve has been the longest in history over like 4+ hundred days. The historical average between the 3 month and the 10 year, when you have the inverted percentages on those bond yields, is 24 months. And what's interesting is 24 months from that inversion is this October. October 2024 is going to be 24 months from our 3 month 10 year inversion 2 years ago. So it's not the high, right? It's the average. But you're talking about 70 plus years to look
yeah,
back and see this inverted yield curve does matter.
yes,
So two things that to me would be they'd make sense for the market to correct. I could see the market ignoring it just a little bit longer, and we have like a Q4 stretch just to end on a good note for the year. But this is why I think this is why 2025 I'm playing defense. This is why I'm looking at value funds. This is why I'm doing a lot of
yeah,
options. This is why also I started this a week ago. I'm looking at the FXY, which is a Japanese yen ETF. So if we have a
Interesting.
major deleveraging event, right? If we have a major risk-off event, the Japanese yen will likely appreciate in a big, big way. And it would just be like a massive deleveraging, like we saw back in this would have been 2014. This would have been in 2020. This would have been in 2022, end of the year, when we finally rebalanced from that big push from May to November 2023. Japanese yen was extremely weak, but within 3 months, November, December, January, we had a 50+% correction on most of those JPY crosses, which was thousands of pips. So to me, I look at FXY as a way that I can trade the Japanese yen without being charged daily rollover like you are in the currency market. If I'm a forex trader, I get charged every day to hold the yen strong. So I just trade an ETF where it's just a cheap cost basis like you hold a stock. So, and I'm probably early, and it might be, maybe it's 12 months away, maybe it's 24 months away, but I'm long bonds for this little volatility play. I'm long FXY, and I'm also long, gold, silver. I've got some Bitcoin, whatever, but I'm also long the VIX. I'm trying to be long the VIX like every probably 60 to 90 days. So I mean, I want to have some protection out there.
Yeah.
In addition to, it's hard to justify buying highs, but you look at all these like all-time highs, all-time highs. This is something also staggering. I know we're.
Yeah.
Um, did you know that over the last? Let me see what the. This might be a really long period of time, but let me find out here. So if I go back to, so if you missed as an investor the best 10 days that the market has ever offered
Oh, I've
since
heard that.
2003. So we're talking over 20 years. Of the last 20 years, if you as an investor missed the top 10 days of bullishness, you basically cut your gains in half.
Yeah.
It's insane. It's like, so, the point is, if you stay invested, that's the point, is like stay invested, keep buying the haystack. Um, because the biggest days, like this was October 2008, the market was up 11.6%, top 10 best days. October 28th, 2008, 10.8%. March 24th, 2020, 9.4%. I mean, when this is interesting how this happens, right? When we finally had a bottom, it's funny, like October 2008 was not the bottom. The bottom was like September 2009. That was like
Yeah.
the bottom. But that
Yeah.
up day, you missed 11.6%. But again, 11.6% doesn't feel good when the market's still having a 56% drawdown, right?
Yeah.
So I want
Yeah.
to put it in context. It's not like, oh, you missed out. It's like you're still going to have up days in a terrible bear market, right?
Yeah.
But these numbers are huge. Like, I mean, the top 10 days, can you imagine right now, Andre, that a 10% day in the SPY, that would be a 50-point move, man, a 55-point move in the
That
SPY.
would be
That's a
insane.
500-point move in the SPX. Those are insane numbers at
Yeah.
this point. Yeah.
Yeah. Insane. I
Yeah.
could not even imagine.
So again, pretty wild stuff. Can you do me a favor? Let's go
Yeah.
through. Dude, this is great stuff on the Fed funds. I'm going to hide this for a second. This is going to be great for some of my talking points later this week.
Yep.
That makes a great point. And let's talk this. So I was going through some of my tried and trues, my favorites.
Yep.
Will you? Since we talked last time, I know that we didn't get a chance to spend a lot of time on forex, cryptos, and futures. To me, this matters if you are trading them, right? Like, are you trading some of your studies on futures? If so, what? I mean, I know you like to trade options, you like to do credit spreads. Credit
Yeah.
spreads on futures would be great, right?
I don't do them. I never do them.
Okay.
I only do spreads on SPX. That's
Okay.
it,
Gotcha.
exclusively. I Do you ever trade options on futures?
Yes, I primarily trade I mean, I primarily in futures. I don't just trade futures contracts. I trade options. So I have a trade running in crude oil futures right now, silver futures right now, and I actually something I can talk about more offline. A really interesting study on, yeah, we're familiar with Tasty and Tasty Trade in their style. I mean, they like to do strangles. There's a couple of traders that I've been following really closely on their strategies. They do longer durations. They do like 90-day strangles on the futures market. So they'll do like wheat or corn or cattle or obviously index futures. But the way they position for it, they have a really solid win rate, 85 to 90%. And they're on average generating. I mean, the nice thing about the futures contracts is it definitely costs more to get in those trades, right? SPX is a pretty expensive trade. It's not defined
Yeah.
risk, or you can't do naked, but I do a lot of synthetics on SPX and NDX. The point is, with futures, if you have a directional play, credit spreads on futures are awesome. because it might take up a little bit more buying power, but a credit spread on a futures contract for the day or for the month or for whatever it is, you can trade the same thing, like trade a delta that's a high probability win. And if the market goes up and stays above your line in the sand, full credit, you make a lot more money that way. Like 0 DTE or a 1 DTE, I mean, you know this, like you're going to see on the SPX, you might make $1 or $2, right?
Yeah.
And
Yeah.
if you're able to do that in a futures contract, you could probably make $2, $3, $4 net profit over a week or
Wow.
maybe over a couple days. Like their volatility is a little bit higher. You know, their IV rank and percentage move and stuff is a little bit higher, so you collect a little bit more premium.
Yeah.
But obviously there's a risk. I mean, if you're
Yeah.
putting up
Of
more
course.
money, it's higher buying power. Some traders need to have futures permissions to trade.
Yeah.
But you know, my tasty clients that I work for or trade with, they have the works, and so they can trade futures, they can trade stocks, options, they can do crypto, they can do all sorts of stuff.
Interesting.
So that's good. But anyway, we can.
I
But yeah,
never
futures.
looked
You
into
trade credit
research
spreads, dude.
on
You might
that.
like it. Think about it.
Yeah.
Think
No.
about it like a little bonus. Like
Yeah.
you like the indexes. So it's the same type of idea, the same type of trade, but you're basically just kind of throwing a little bonus trade. If you like the high probabilities of wins, you get a little more
Yeah.
higher IV in the futures market.
Interesting.
Yeah,
Very interesting.
yeah,
Good to know. I never looked at it just because I always thought that the volume is lower, the open interest is lower. I was slightly concerned about liquidity, and I just never looked into it because I
yep,
was like, this works. I mean, like I like the way the SPX moves,
yep.
but I mean, I'll definitely look into it for sure. If it's
Okay.
the same thing, it's just a different underlier. I mean, I don't care.
Yeah, especially if you're
Yeah.
looking. I mean, you can look at like open interest on some like cocoa this year has been one of the big like thin futures market that just ripped 1,000+%, and then
Yeah.
had a massive pullback. I want to say, what's cocoa here? CC is cocoa futures. So if you look at this on a weekly time frame, I mean this is unbelievable. I mean you start from 2270, rip up here at almost 12,000. There was a combination of things like there was a lot of drought in Africa that were leading to like just it was killing the crops and it was just killing the supply, and so it just became more and more expensive. What I think is interesting is this type of 400% rally. I mean, I can't tell you the last time I bought a candy bar, but I would know that if I was an avid consumer of candy at the gas station or the grocery store, and my Snickers bar was, if we have like a Big Mac index, do we have a Snickers index? Because would this be like a $2 Snickers that's now $5? I don't think
Yeah.
so, but I don't know. Or they just put in fake crap and it's not really
Yeah.
cocoa,
Probably.
it's other stuff.
That's what it is.
Yeah. But still,
Yeah.
I mean, it was nuts to see this. And once the top was in, I mean, I am paying attention to cocoa not because of this first run, but now I want to see what the market's going to do next because I look at a move like this. Are we going, low to high? Is this a market that's going to have like a harmonic pattern where we come back in, set up something like this where the market then rips on a technical move? Or is this going to be, okay, we had our high, we had our low. Now the cocoa market's going to continue to work its way up, maybe test the highs. And this to me is where I'd get really interested. I could do a lot of bear call spreads right there and just put in defined risk. If it stays below that point, make money on cocoa futures.
Yeah.
So it could be an easy trade, right? It's nothing I'm not
Yeah.
gonna change my whole portfolio on a couple futures contracts, but
Yeah.
it could be an extra maybe 1 to 2% to my bottom line. You never know.
Yeah.
So
Interesting.
something to pay
Very
attention to.
interesting. Yeah.
So let's see what else here. So let's go into what, are you noticing anything right now with some of your studies in the forex market? So I'll give you my sense. DXY dollar index
Yeah.
extremely boring right now. It's very range bound. I have a hard time getting direction on it. Um, do you have any studies with your forex on like ranges or establishing like ATRs and how often they stay within those kind of daily, weekly ranges?
So regarding forex,
Hmm.
I personally never look at it,
Okay.
but in general, if I were to look at stocks, if I can share my screen, I think
Of
it would be a
course. Yeah,
little
yeah.
bit
Let me share
easier.
it. Yep. So I'll stop presenting. Go ahead and take it over.
All right. All right. So I'm going to look at stocks here,
Okay.
and everything applies across the board to whatever asset you're looking at. It applies. So the one that I like to use for establishing weekly ranges is the high and low by weekday.
Hmm.
This is something that's actually very interesting. I'm looking at SPY in the trailing 1 year. Now, when you see this, when you see, let's see here. Let me find the example. There was a great example a couple weeks ago. Here. Okay. So let me just quickly do this. Let me set up this chart so I can show you what I'm talking about. Okay. So this is the week that I'm looking at right here. I go, this is Monday, Tuesday, Wednesday, Thursday, Friday.
Okay.
Which you can see here, what this measures is the highest high of the week and the lowest low of the week.
Right.
If you see Wednesday setting up to be the highest point of the week, as it was right here, you can expect with very high confidence that Thursday or Friday will reclaim Wednesday's high. Because in the last year, Wednesday has only been the high of the week 8% of the time.
Right. And also the low of the week only 12% of the time.
Exactly. So here you can, and then also Thursday, Friday have been the highest points of the week, the most frequently by far.
Right.
So when you see the setup where Wednesday starts creating the high of the week, you can now have a very bullish bias for the rest of the week, expecting either Thursday or Friday to take out Wednesday's highs.
Gotcha. That's a great, dude. That's a great. So basically, if you're looking at by the time you get to Wednesday, if Wednesday's higher than Tuesday, Monday, probability is Thursday, Friday is most likely going to poke and make a higher day.
Correct.
Yeah.
And then for the most part, honestly, it's not as like this poke, but for the most part, it's like a significant high that's made.
Sure. Yeah.
I don't have good examples here, and I don't want to just like go through trying to find them. But looking at this, Thursday, Friday tends to be the high of the week. If you like to swing trade, or you like to, like for example, if you like to sell put spreads, here, selling put spreads here would have been great. Maybe this pullback, like depending on how you like to enter, it does whatever. But selling put spreads here to say I'm expecting price to continue as the week progresses. Or you can get long. There's a million ways to do it, especially with options.
Yeah, for sure.
So the weekly positioning, this is one thing that I like to look at.
Nice.
The other thing that I like to look at is the by close. So this is just a little variant of the other report. So this checks the highest closes, not the highest highs or lows.
Okay.
So similar picture across the board. The one that I personally like to use is the standard report, but this is one that I think is just contextually when you're painting out your week, when you're looking at how everything is kind of unfolding, this is one to look at.
Okay.
So when Mondays tend to be the lowest point of the week most frequently, Fridays tend to be the high most frequently as well. So you can kind of think about the weeks progressing in an upward trend. Obviously, we're in a bull market, so keep that in mind.
Sure.
That helps, but this is the way that one of the things that I like to look at when I'm kind of framing the week. Another thing that I think is important, which has actually changed a pretty decent amount in the last few months, is looking at the green and red days by weekday. So Monday and Tuesdays, 70% of the time in the last year have closed green. So to me, I don't want to be very bearish on Mondays.
Right.
And if I could expect price to continue upwards throughout the week, here, selling put spreads, when you see Mondays be bearish, expecting price to continue, another high probability trade.
Nice.
So this is the type of stuff that I like to look at. Now, green or red, just so everyone knows, doesn't mean that price is going to come down and wipe away the gains. But here, historically, it's kind of a coin flip.
Sure.
On whether Wednesday through Friday is going to be red or green.
Yep.
So those are two things that I like to look at when I'm framing the week. But there is also something that I think that you'd be really interested in, which is what we just recently added, which is the customization of the reports.
Okay. Yeah, that's new to me. Nice.
So this is actually really interesting because right now, these gap fills, I'll just go to today, for example. Let's actually try to find a better example here. This is a pretty good example. So as a reminder to everyone, a gap fill is when the previous day's closing price, so this is yesterday, this would be today. Today opened right here. So you can see there is a gap up because we opened above the previous day's closing price. Now, when you're looking at this, it will fill the gap or touch the previous day's closing price 63% of the time, whether we open above or below the previous day's price. So in this case, this would be a gap up. So we opened above. Now, here you can see that price came down and filled that gap and means that price touched that gap. This gap here was, let's just say $1 on SPY. It's a decent gap.
Sure.
And what you can do here now is change the percentage of the gap that you want to see gets filled.
Okay.
Right now, this is at 100%, which would mean that it has to touch this blue line or the previous day's closing price to count as a gap fill.
Right.
But if I change this to 50%,
Probably those are going to be way higher probabilities. Yep.
now we're looking at 80%
Yep.
success if you target half of this move.
That's awesome, man.
So right now, this is $1.
Yep.
You can see right here, this is the halfway point. So
Yep.
I'll just mark out halfway point. I'll make it red. So now instead of targeting here, I'll just make this bigger. Instead of targeting the previous day's closing price, if you just target the halfway point, now your win rate is close to 80% in either direction. So
Yep.
this is something that we've added, the customization of reports.
Perfect.
So we have it on here. We also have it on the orb. We have it on a bunch of them.
Okay.
But now you can change the time frame of the opening range you want to look at.
Yep. Okay.
Now we changed to 5 minute, 15, 30. And I know that you obviously you use the indicator, which you can also change the settings for.
Yep.
So now you can change this to whatever you want. And in this case, if you want to look at the 5 minute, you just change this to 35, hit enter, and now go to the 5 minute time frame, and now you have your new orb.
Yep. Nice.
So this is something. So the customization is one thing that we added recently. Another thing that we added, which Chris, I think that you would enjoy, is this down here. So this table makes up the entirety of the results that create this 60%. So here, it used to be, here is the results. That's it. Now you scroll down a little bit and you can see every single day that makes up that 60% and the 40%, every single day that makes up the gap fill. You can sort this, you can filter this, you can go here. I want to look at filled, enter. Now all of these results are for the gap filled. Now if you want to type, if you want to just click right here, the price chart will appear directly below.
Nice.
So this allows you to see, okay, well, I want to see what happened on the larger gaps. I want to see what happened on the smaller gaps. I'll just remove this, obviously. I want to see what happened on the larger gaps. I want to see what happened on the smaller gaps. So you can see here, clearly the larger gaps didn't fill. One of them did, but you can go and see these price charts. So that's something that's really interesting to look at, and you can kind of dive deeper to see what's what.
Yeah, that's excellent. Yep.
Yeah.
I mean, by far one of my favorite studies. Like literally last week, Friday, I was talking through like the size of the gap as well as the day of the week, and it was like a 65 to 71% to the tick. SPY hit it first, SPX hit it second. But I mean, right there, it's like good probabilities in the day. There's the gap fill. So yeah, it is great. And that percentage to me, that dollar and percentage add-on at the bottom of that study is so good.
Yeah.
Yep.
Yeah. I mean, some people like to look at it by dollars. Others like to look at it by percentage. It's just something to keep in mind is if something has run up a lot, like if you're looking at NVIDIA, looking at the dollars is going to be a little bit skewed.
Yeah, so percentages will stay relatively, like the ratios will be proper just because it doesn't matter if it's $1,000 stock or, $100 stock. It's like the percentages will be consistent.
Correct. So if something is a little more flat, then looking at the dollars is fine. Or if you just want to know like how much is if you want to just see like a visual of like, okay, $1 to $3, what is it?
Sure.
You can see it there. But those are two of the bigger things that we added. And then the other thing, if you do trade futures, as a reminder, so I'll just switch to ES here. And I'm going to do that. And I'm not sure if you use the market sessions indicator, the one we have right here. But what this does is it shows you, and this isn't new, but it shows you the outline of the actual sessions that you're looking at.
Okay.
So here, we're looking at
all the New York sessions.
Only the New York sessions.
Yep. Got it.
Which, in this case, I'll just switch to this standard 1 second. So we're looking at the New York sessions. And then now here, with this little clock button, you can actually create your own custom times.
Okay.
So I'll just remove that. I'll click save. So what I'm going to do here is, and then there's a little explainer graph here if you want to look at it. All you have to do is click on this little button right here. But click on that. Now I want to type in New York early. If I want to trade an earlier session, if I want to start at 8:30, save. Now it appears right here. So now just to keep in mind, so everyone knows, what I'm doing is recreating my start and end times of the day. So my
Right.
open and close are changing
Yep.
because I'm starting my day at 8:30. So your gap fills are changing. Your
Hmm.
highs and lows can change. Your
Hmm.
closes can change depending on how you change it. But I know a lot of traders like to look at, okay, I want to look at the overlap of London and New York.
Right.
Or I trade an earlier New York session, and you can continue to add more and more times as you please.
Wow.
This is one of the ones that we added that's been a huge hit for people that want to have their own customization.
Sure.
Um, for the most part, that's a little bit, that's like, I would say like half of the things that we've added so far, but I would recommend to anyone who's watching, we have a completely free trial, and the processing is done through Stripe, so you don't have to worry about us charging your card.
Hmm.
Just try out the trial. It's definitely worth it. I mean, even the monthly cost is the profits of one trade.
Right. What is the trial? Is it for 30 days or 14
Seven,
days?
7 days.
7 days. Okay.
7
Gotcha.
days, yeah. So going through, I highly recommend these videos. They will be the quickest way to catch on to how to read these reports, how to understand them.
Hmm.
We're also building an entire manual, like not a manual, but like a kind of a learning center on how to um, on it, like how to use it, how to be caught up really quickly, and it'll be really good. But it's coming out soon.
Perfect.
Yeah,
Whenever you get that, is that going to be something that you can find in the Edgeful dashboard when you log in, or
yeah,
is that okay? Because I
yeah,
was gonna say otherwise, like
yeah,
send it to me and I'll make sure like I can post it and share it for any
yeah,
members. Okay.
for sure.
Okay.
Yeah, for sure.
And I'll also
So
the one thing that was new is that upper right hand corner. I know that I've emailed you report ideas. Is that how you
yeah,
want me to submit them from now on?
yes, that would be perfect.
Okay.
Yeah,
All right.
that would
Perfect.
be
So
perfect.
any trading indicator idea, any report idea, like Andre was saying, they will build indicators for you. They will generate reports for you. So great stuff to ask from the community. What do you want to see? And they build it in Edgeful. So you can
Yeah,
really you can have probabilities, you know, basically an analyst at your fingertips with Edgeful, and now with even the custom stuff that I hadn't seen the last couple of weeks since we had
yeah,
talked, you can really go through and say, oh, like that's perfect for like the 8:30 if you want to start early. It's like I know a lot of traders that this is when I'm at the computer. So if you put probabilities around when you trade, you can really build a very strong trading plan with, again, looking for that edge, looking for that
yeah,
75, 70, 75, 80% probability. You live in that trading world mechanically. Keep taking good trades, manage your risk, and you are trading with I mean, the house edge is 54%. If you're just long the stock market forever, you have a 54% edge, right? You
yeah,
build on top of that something like this where all of a sudden you have a 70, 75, 80%. Trades get really good and you can make
yeah,
a lot of profits. It really
yeah,
is it really is all about putting together a great trading plan. And you can
yeah,
customize it to you. So you don't have to conform as much to,
yeah,
well, the market wants to move what it's going to do, which is true. But now you can put windows of like, if I only trade 8:30 Eastern time to 11:30 Eastern time, that's my 3-hour window. I can build probabilities around 5 years of data
yeah,
on what happens in those 3-hour windows, so I know that I can trade gaps and trade pocket fills and trade efficiencies and trade
yeah.
breakouts and directional biases and things like that. So really impressive stuff, man.
Yeah, no, thank you. I appreciate it.
Yeah. Andre, I think I'm on Google Meet here. I think we're gonna get booted out here in about a minute.
We're
So
good.
I think we're good. We'll wrap it up here.
Yeah,
I don't want the call to get cut off, but I would love to have you come back and do this
yes,
again. And not
sure.
have like a macro nerd out for the first 20, 30 minutes. So we'll actually dive into Edgeful the whole time.
Yeah,
So let's plan on doing that again. If you're
perfect.
available in the next, few weeks or the next month or so, let's line up
Yeah,
again. But so far, love what I see. Every time I talk to you, man, I learn so much more, and so I will start incorporating this into my sessions, share it more. And if
perfect.
anybody has any questions, you know how to reach me in Discord. I've got the affiliate link in my Discord channel as well, so you
Yeah,
can check that out. Again, 7-day
yeah,
trial. The trading indicator or the trading view indicator suites. Report your studies, ask me feedback. I mean, the
yeah,
nice thing is traders, if you're in my community and you're asking for studies or you want to brainstorm, like I'm happy to take feedback and live sessions. Let's kick around some ideas we can support or we can submit to Andre and the team
yeah.
where we can have
That'd
some
be
great
great.
stuff built for us. So that'd be great.